Bad credit loans seem to be a hot topic these days. In fact, if you need a bad credit loan, you're likely to find an overabundance of information. See if this sounds familiar. You need a loan. Maybe you want to buy a car, enroll in college, or take out a home improvement loan. Or perhaps you're a first-time home buyer and you're looking for a mortgage. The problem is, you've got a bad credit history, and you're afraid you won't be able to find a lender. But then you do a little research on bad credit loans and find that, lo and behold, there are loans for people with bad credit available. In fact, everyone wants to give you a loan. Loans for cars, mortgage loans, student loans, personal loans, loans for just about anything you want. Not only loans, but credit cards too. Why, who would have ever thought it would be so easy to get a loan when your credit history is so dismal? So, that's great news, right? Right? Let's just stop for a moment. Ask yourself, why is everyone so eager to extend credit to me when my credit history is so bad? The question can be answered in 2 words: high rates. Sure, you can get a bad credit loan easily enough, but you'll pay through the nose when it comes to the interest rate. So what's the big deal about paying a little higher rate, you ask? Let's look at a few figures. Suppose you want to buy a car. After looking long and hard, you find the perfect car for $20,000. So you apply for a car loan and get a loan with no trouble. But because of your poor credit, you have to pay 20% interest. On a 60-month loan, your monthly payments will be $529.88. Now if your credit were very good, you might have gotten the same 60-month loan at an interest rate as low as 10%, with monthly payments of $424.94. The bottom line is, over the life of the loan you'll have paid an additional $6,296.40 in interest that you would not have paid if you had gotten the loan at 10% interest. Your bad credit loan will have cost you $6,296 more for the same car. But if you think that's bad, take a look at a home mortgage loan. Suppose you want to buy a $100,000 home and you're just thrilled to find a lender willing to give you a 30-year loan in spite of your bad credit. He'll charge you 12% interest, and your monthly payment will be $1,028.61. If your credit had not been so bad, you could have gotten the loan for a rate closer to 9%. If your credit had been very good, you might have been charged only 6% interest and your monthly payment would have been $599.55. The bottom line: that bad credit loan will have cost you over the 30-year term a staggering $154,461.60 more than you would have paid had you gotten the loan at the 6% rate. Note, this is not a typo. Your lender will pocket $154,461.60 in additional interest payments because you were charged a higher rate for a bad credit loan. That's over 1.5 times the cost of the house itself. So why did he charge you the higher rate? Because he knows he can get it. After all, he's got you over the barrel. He knows and you know that you need a loan. But because of your bad credit no one's going to give you one at a low interest rate. Do you see now why people are so eager to lend you money in spite of your bad credit? In fact, credit reporting companies make a fortune selling lenders the names of people who have bad credit. Those lenders know they can charge them high rates, and that if they need credit, they have no choice but to pay them. So what's the solution? You may be thinking, what choice do I have anyway? My credit is bad. I need a loan to get the house or car, college education, or whatever, and there's just nothing I can't do about it except find a lender willing to give me a loan at whatever interest rate I can't get. But consider for a moment whether you might be looking at the situation from a completely wrong angle. Rather than resign yourself to the situation, you should be thinking about repairing your credit. Now, if you just found the house of your dreams, you may have no choice but to act now before someone else buys it. But if you can't wait a couple of months, it's highly likely you can make some major improvement in your credit score and then look for a loan. Maybe this isn't what you wanted to hear. After all, you're looking for a loan, not credit repair advice. But wouldn't it be worth it to postpone getting that house or that car if it would save you thousands, tens of thousands, or maybe even $150,000 or more over the long haul? If you're thinking your bad credit history is something you're just stuck with, or that it will take years to improve, you're mistaken. It's often possible to make major improvements in your credit rating in just a few months, and in some cases in as little as 30 days. It's not that difficult either. You basically have two options. You can hire a credit repair agency, or you can take the do-it-yourself approach. If you decide to hire an agency, you can easily find one in your phone book or online. Just look for credit repair. However, it won't be cheap. Agencies usually charge from $2,500 to $5,000 or more to repair your credit. But that's still a bargain compared to how much you'll be saving in the long run. But if you think only a professional agency can fix your credit, think again. In spite of their high fees, they won't do anything for you that you can't easily do for yourself. If you can't write a few letters, address, stamp, and mail them, you can repair your own credit. If you choose the do-it-yourself route recommended, you can learn how by doing some online research. Unfortunately, along with all the good information, you'll find some misinformation as well. The better option is to find an authoritative book on credit repair and follow the advice therein. In conclusion, you should seriously consider postponing your search for a bad credit loan. First, spend a couple of months improving your credit rating. Then you can abandon the search altogether, and begin looking for a good credit loan. See Business Power.